So good morning, good afternoon, good evening traders, and how are you doing? How are you guys doing today? Welcome to a new video, and in today's video we're going to be talking about why you should be trading algorithmically. Okay, you should have step-by-step based approaches to getting entries in the markets, and why you shouldn't just be trading without a guideline. Okay, because as you all know, if you've ever traded live, you know the market is very manipulative. The market is sporadic. The market is just random and all of that stuff. If you don't have a certain rule, no matter how good you are at trading, and if you don't have a plan to get involved in the market, how to get involved in the market, data showing you that your trading style or trading strategy works 90% of the time or more or less times you're going to lose to the market, not because of your strategy but obviously because of your execution in the market. Okay, so you should be able to have what step-by-step rules for getting involved in the market. Okay, now if you go ahead and study the most successful traders in the world, we have Christian Kwalamagi, the turtle traders, and a lot of successful traders, and you try to look into the approaches they kind of followed in order to be profitable in the market, you will discover that most of them have certain criteria they want to be met in order to get into a trade. Okay, so they have rules for getting them into trades, and they have backtested data. Christian Kolamagi normally talks about having at least 1,000 or more, or tens of thousands of trades back tested. What it means back tested is going back in the chart, playing the chart as if it was real life, back tested, and what kept under your belt as or your arsenal in order to improve or sharpen your skills. This thing of trading is not about filling it out, getting into a live account, or trying to feel how it feels while losing money before you learn. Okay, so you have to be able to um, know what you're doing by what having a lot of backtested trades, having rules. Because if you don't have rules, how will you backtest? Then when you're backtesting, you might discover, oh, I don't have a strategy. But if you have a strategy during your backtest, you're going to be able to discover that these are the particular criteria. Some traders frown at backtesting, they frown at paper trading, and the same traders have been trading live for the past year or 2 years or 3 years, and they've not been making any significant profit or returns. Listen to the guy who has done it, or listen to the traders who have been here before you. That's a mistake a lot of traders did. I have also made the same mistake previously. I've blown a lot of accounts, which allows me to kind of correlate or understand when professional traders are speaking. Because a lot of times I don't really understand what they're saying. I'm like, oh, my strategy works. Do I have to make myself stress more to backtest it? Why do I have to take my time to have a trading plan? Why do I need all these things? And the simple answer is we don't really know what we're trading until we have a trading plan, which can keep us accountable. Because as human beings, we easily get distracted by things like greed, pride, and so on. Okay, like some traders. Imagine I made a weekly outlook, and we're targeting a very high on Euro USD. Let me get rid of the session boxes. I was just trying to look at my sessions, and on Euro USD, we're talking about running a lot of highs and being on the high part of this market. We're taking it higher. And as traders, you can remember there was a session in this market that this market kind of rallied lower, and then our bias was kind of thrown out the window for the moment. Right now, I can't tell you objectively where Euro USD is going. I can't tell if it's going high or if it's going low, but I'm obviously looking at the market to be able to predict or to try to get a bias. It doesn't mean on the lower time frames you're not killing it, you're not getting trades or any of that sort, because we have kind of good concepts that allow us to get into trades. Okay, now if you're that trader, will this bias make you flip away or start looking for any random thing? Does your trading plan keep you accountable? Do you have backtested trades that are going to keep you in this game long enough? Because if you study the most successful traders here, a lot of them, that's now in this new age where we have access to a lot of information in order to advance ourselves. A lot of successful traders are usually between the age of 10 years. Okay, they'll tell you they've been learning trading for 10 years, 4 years, 5 years. and obviously you could fast track it or you could slow track it. You could become profitable in a year, in 5 months, in 3 months, depending on the work you put into the skill and how you go ahead understanding and performing without having a lot of psychological issues, because that's the major thing that fucks everyone up. Everybody knows how to backtest a chart, everybody knows how to get into a trade, but the psychological part really gets people down, and that's why I talk about algorithmic trading, where you have a set of rules, a good defined rules, which are gonna get you into a trade, keep you in a trade, or get you out of a trade. So if you have those rules in line, all you have to do is just follow those rules. And imagine you have a set of rules which you back tested. Okay, I've closed my journal. But which you've back tested over 1,000 trades, over 10,000 trades, and you discover that your equity curve has been positive during these times, and you discover your win rate is 20%, 30%, or even 40%, you would be able to have utter confidence while executing this every single day when you come to the chart, and you'll be able to what? Understand that you're not gonna always be at the highest high of your profit. Okay, maybe you made $1,000, you're gonna lose 200, then lose 300, then make another 1,000 or make another 1,000. So you're not always gonna be on the top of your equity curve. You're not always going to be getting the direction right. Okay, these are things that as a trader shouldn't really affect you, except you're kind of like an egotistic kind of person who is always trying to say, oh, I predicted the high of Euro USD, or I predicted the low. Obviously we call this kind of up move right here, and I told you guys that I wasn't that confident in seeing the market rally all the way high here, which in time, if it starts doing, we're gonna get involved. But before I say anything out here, I always obviously like to see price action, which is in line with what we've been seeing previously. And right now, I can't tell you if I'm long or short on Euro USD, but at the same time, we are still killing it on Euro USD. We are catching good trades on Euro USD. Um, in the next weekly outlook, depending on what the market does, we will be able to break that down. Now, notwithstanding or going away from the topic which we've been talking about, which is trading algorithmically. If you had set rules on getting into the market, if you are at any point confused on what you are present to do in the market, it means you don't have a set rule. It means you don't have an edge in the market, because an edge presents itself once in a while. You're not going to be part of every single move, every single up and down move on this market. You're not going to always be here to catch the highs and the lows of the market, the ranges, the top, the flip, the jockey, whatever. You're not always going to be here to catch those. So you just have to wait for the most probable moves in the market, which are in line with your what? Strategy, which you have a good set of collected data which are backing it, because this is going to give you unwavering confidence in executing your strategy. That is how you beat the 90% of the traders. Christian Kolamagi didn't start with $1 billion. He started with, I think, $5,000 or $3,000, and he has turned it into 100 million. Yeah, within a span of like 5 years or 6 years, I believe so, or 10 years at most. But you can imagine that $3,000 to 100 million, which is still on the rise, is still on the go. So as a trader, you don't just start building from $1 million. Some traders start trading today and they are looking to get funded with $1 million right off the back. It's very possible if you are rich, but in the steps of learning the market, you don't throw out everything you have. Especially when you're a beginner, no matter how you feel you're smart, you know the market. You don't just throw everything at it. You start small, because every single trader starts small, and then you build it up to the millions and billions. Okay, there are a lot of good traders out there showing off profits. I know it's all good. I know it's a great thing to see have motivation for yourself. But the motivation you should have starting out right now is that a lot of traders lose money in this market, and a lot of traders take years, 7 years, 10 years. Some traders you compare yourself to have been in this market literally for 10 years to get their edge, and it's just their edge they have. And if you can find your edge within the first year or the first 2 years, you have the rest of your life to make profits for yourself. You have the rest of your life to compound your account. You have the rest of your life to keep making money in this market, with not considering the market conditions, the market delivery and whatever. You have the rest of your life to make money in this market. So that's just one thing I want you guys to consider. Don't ever open a live account without knowing the plan, the exact plan you're going to use to trade this account. Because imagine you open a £5,000 account and you lose 200 on your first trade. Are you okay with that losing of 200? Are you thinking in terms of percentages? So some people are just going to tell you, oh, I lost 10,000 today. What percent of your account did you lose today? What was your plan on this particular strategy? Okay, so I've been ranting for a while now. So hopefully this video kind of gave you a little insight. I know I didn't give you anything technical. In this channel, we give both technical and we give psychological tips. And this was just one of the little psychological tips for those of you aspiring to become the OGs in trading. Study the successful traders. Check what they are doing. Okay, Christian Kolamagi, he takes trades that have high risk to reward. That's he's risking like $2 to make $20, something of that nature. Okay, or he's risking $2,000 to make $20,000. So that's his own concept of trading. And he goes on to explain that he takes a lot of losses. He's usually in a sea of red, and then one win brings him all out into profit, and then it starts consolidating and taking another set of losses. You could imagine it like this. He starts out to losing. One win takes him out of all these losses. Then another streak of losing. One win takes him out of profit. So he just says he's usually in a streak of losses, and this is due to his risk to reward. So if you carry this and kind of span it over time, let's just copy this way, Control C, and then kind of span it over time, you can easily see where he's going. That's why he's able to turn $3,000, a little amount of capital, into what? Great amounts of funds. So it's not about your one day trading, your one single trade that just turned into a loss, that is going to make you or break you as a trader. All those things are secondary. Okay, so you have to think on a series, a trade based series, a series of trades, and see yourself doing this. You can't just start doing something like this from not having the proper knowledge, the proper tools in your grasp to be able to do something like this. So study the traders who have done it, and then what? Keep yourself motivated. Create a plan. Create something that's gonna keep you accountable. Okay, I said I'm gonna share a lot of those so in the channel, and I'm gonna do that, not going back on my word. So that's how to outperform the 90% or 95% of traders that lose money in the market. Simply just putting in the work. If you go on the data, they say like 90% of traders lose their money in a month. Their trading account. I have lost an account in a day, so it's not something so surprising. But if you easily go and check those the previous executions of those traders, you discover their risk management is either off, or their trading strategies, trading plans not keeping them accountable. They are just doing like a freestyle on the trading, not treating it as a business or something that is worthwhile. Okay, trading is a very lucrative business if you take it seriously, and if you play with it, trading is gonna play with you and for easily give you punches with no respect. I always say it, market doesn't have respect for you in person, so the market just does what it needs to do without considering a lot of people and a lot of biases. So at the end of the day, I always say you can't predict 1 million pips in the future. Just follow your strategy. If you predicted 1 million pips and your strategy is delivering according to that, that's all fine. You could become Jeff Bezos tomorrow by catching good trades together with your buyers. That's just the use of the buyers. So that will be all for today's video. Hopefully this helped you guys. Leave a like, leave a subscribe, and I would love to see you guys in the next video. Stay blessed and keep the fire.